Hi guys, it's Henry from Investments for Expats here. If you haven't checked us out before, we help 6 and 7 figure expats optimize their wealth and reduce their taxes. Today I'm going to go over a quick market update about what's happened in August, then touch on the economic factors which we've seen the last month or two, and then look at your portfolio, how it may be optimized as a long-term investor. So what we've seen in the last month or two from the equity point of view in the markets is we've seen a strong US S&P finish in August, it's at 4,200. From the UK side, that's mainly been lifted up by the large oil companies, finish over 70,500. This has been reciprocated in most parts of Western Europe as well. From an economic point, what we've seen is the chip bill being passed by the Biden administration. That's big win for the US chip manufacturers. Companies like Nvidia, IBM will be likely to benefit from this. You've also seen tensions in Taiwan with the Nancy Pelosi visit going across the region as well, or staying in the region. We've seen China have short-term impact from the COVID lockdowns again, and also from a longer-term perspective have trouble in the housing market that may be an issue. Also, from a global point of view, we've seen inflation in developed countries like the UK, US. CPI level has been around 8.8%, so 8 to 9% inflation. So from your portfolio, what we've seen in August is the equity markets are looking bullish, bond markets are looking bearish, mixed signals. Where to look for a long-term investor? Obviously, this is not specific financial advice. What I've been looking is bringing a bit of value back to the market. We've said this before. Companies like Meta that are now trading on a PE ratio of 14 that have quarterly revenue and net income that is similar to what they were last year. On the other sector, oil's obviously been strong this year, but you've got companies like Shell that are on a PE ratio of 5 and giving 4% dividend and have low beta of around 0.67%. From a macro perspective, we've got inflation, so where you might want to look is companies with good profit margin, they've got good free cash flow, and also they're able to pass that price to the consumer. So luxury brands have been a sector that have done well in the pandemics, they've got that brand influence. Also from a regional or index area, we touched on it a bit already, China, the CSI 300 and the Hang Seng are down around about 15% year to date. For the long-term investor, China looks more of a value. Although it does come with some risk, it's hard to argue against the long-term outlooks. Is China getting more prevalent on a GDP on the world stage? Normally people have this as 5% of their portfolios or even less in Chinese equities. Again, this does come with risk, but may want to rebalance more of your portfolio towards Asian equities, specifically China, for the longer term investor that can take that risk. I hope you've enjoyed this. If you have, feel free to like and share. If you've got any questions, feel free to leave it in the comment section, and I'll see you on the next video.